first of all, the dollar is extremely overvalued. I mean, if you look at the yen, for example, trading a little bit below 150, well, the purchasing power parity level of the yen is about 90. It's dramatically overvalued. The euro as well, and all the major currencies are very undervalued versus the dollar. Why is that? Well, you've had this sort of US exceptionalism, the privilege of the US having the global currency. Well, that's sort of being devalued for the reasons that we talked about in connection with gold. The US's net international investment position is turning negative. People, because of things like tariffs and shall we say, wayward US policies recently, the trust in the US as the safe haven is disappearing a bit as well. So all those things say to us, and you've seen this in history, that we're probably into a sort of 5 to 8 year period when the dollar declines in the long run. Now, the next 2 or 3 months, it's probably overshot a bit on the downside. But on the next 5 years, I think most likely we're in a dollar bear market at the moment. The yen in particular, but also the euro, and 1 or 2 other currencies as well, look quite attractive versus the dollar. And that's quite important because we've been in a dollar bull market for most of the last sort of, say, 12 years. And it was very easy for an asset allocator just put everything in the US. We're not in that world anymore.
Well, that would play very well into President Trump and also Treasury Secretary Bessent's plans as well, if dollar is to continue weakening for the next 4 or 5 years or so. The next bull market, we're done with the bull market for dollar, according to you. The next bull market is likely, you think, to be in yen. Is that right? Because you've done the math, Garry. Yen is actually about 44-45% undervalued against dollar.
Right. No, so it's very undervalued, and just go there as a tourist and see how cheap it is. And, I talked earlier about purchasing power parity. It's one of these sort of weird numbers that economists come up with, but it, simply tells you if you go and have a nice lunch in Tokyo, it is ridiculously cheap compared to anywhere in the rest of the world. It also comes down to interest rates. And, we've got a new prime minister in Japan who is going to do more easy fiscal policies, said she's going to try and put pressure on the Bank of Japan not to raise rates too quickly. But ultimately where we are is that core inflation in Japan is running over 3%. Employment, the labor market is very tight. The economy looks like it's doing fine. We're in a process where the Japanese central bank is one of the few in the world that's actually in a structural phase of raising rates, where the Fed, even if we don't have a US recession, we just have a sort of soft landing. Employment is weak. We've got this jobless boom. So the Fed will be cutting rates. Interest rate differentials are clearly over the next 12 months going to move in favor of the yen. And that should bring some of those big flows of Japanese money back home again.
Yeah, and that's a major disappointment for those who was asking the question of, is yen carry trade back? I mean, just looking at the very short-term reaction after the weekend election outcome, of course, sending the Japanese yen to a 7-month low. And even if the BOJ takes things very slowly with the rate normalization, Garry, that things are different now, that the rate differential story, especially compared to countries like the U.S., it's different from what's been going on for the last few years, right?
Yeah, and the reaction to Ms. Takaichi becoming, or the likely prime minister once the Diet has voted on it, was a very knee-jerk reaction. We had stock market going up. We had the yen weakening on the idea that she's going to be very aggressive on fiscal policy and stop the Bank of Japan raising rates. But you've got to remember a few things. I mean, first of all, the LDP does not have majority in either house of the Diet. Secondly, if you look at the appointments she's made, the cabinet secretary, for example, Aso Taro, is famously a fiscal hawk. He used to be finance minister. Other members of the leading members of the party are the same. And ultimately, the Bank of Japan is independent. The government can put its word in and say, we don't think you should raise rates too much. But Ueda, I think, is a pretty independent character. So the prime minister is quite limited in terms of what she can do. And that says to us, therefore, the market's sort of overshot on this a little bit.
Garry, if you're right, yen is 44% undervalued. If it plays catch-up right, that would put the yen at probably about 100, maybe even stronger than that. How fast is this going to run, Garry? I'm very curious. And how worried should we be about a second leg of the yen carry unwind? Because almost a year ago, last August, we saw what happened there.
Right. So it really depends on whether we have a recession. If there is a US recession, and we think the probability is probably around about 40% now, if that's the case, the Fed cuts rates really sharply. You know, if we see a big rise in unemployment in the US, the Bank of Japan is not going to cut rates sharply, and long-term JGB yields are not going to come down that fast. So that's when the interest rate differential really narrows. And as you said, you know, 100, I mentioned earlier, the IMF estimate of the purchasing power parity is 91. And, you know, when the yen moves, it can move very quickly. So we haven't seen that recession yet. But when the Fed, if the Fed really starts to cut rates aggressively, you know, particularly if we start to see some further interference from the Trump administration in the Fed, pushes it to become more dovish, those interest rate differentials could narrow quite quickly. So I'm not thinking it's going to get to 100 in the next 6 months, but, you know, over the next couple of years, that would not be surprising, particularly if there's a slowdown in the global economy.